Now you're getting 50% or more points per dollar and transferring to Southwest just when you need it. And then
Wow.
they stay in the Chase account, so they're more flexible as you need them throughout the years with hotels or airlines. It's just not all Southwest anymore. So just one thing to remember in the points game.
Welcome to the Next Level Income Show, where it's our goal to take your income, your investments, and your life to the next level. I'm your host, Chris Larson. If you haven't yet, get a copy of our book for free at our website, nextlevelincome.com. That's www.nextlevelincome.com. Just click on the book link, and I'll even send you a copy if you put your address in. On today's show, we have Chase Insogna. Chase is the founder of Insogna CPA, a highly successful Austin, Texas-based CPA accounting firm. What makes Chase and Insogna CPA different from other accounting firms and investment advisors is that he works with business owners to build their wealth while they're building their businesses. We're going to talk about what that exactly means today. For instance, the profit first formula. We're also going to talk about some fun stuff like how to maximize the points that you get on your credit cards to buy fun stuff or to take trips and travel for little to no money. Chase, welcome to the show.
Hey, thanks for having me.
Absolutely, man. It's my pleasure. I'm excited to have this conversation today. And for those of you watching on video, Chase is billing me. He's not billing you, so don't worry about that. Chase, we're gonna talk about a couple really cool things today. One of your favorites and my favorites is like how do you leverage some of your business expenses and some of your systems to get benefits that we don't usually have as business owners. But before we kind of get into our different conversations today, if you would please share a little bit more about your background with the audience.
Yeah, been doing accounting and taxes for 25 years now. I've had my firm since 2011. We're a team of 20 people currently, focus on half accounting, half tax, but really using the transactional services to drive advisory. We're doing weekly check-ins with larger clients, forecasting, budgeting, and then using that to leverage for taxes and tax planning, as well as like trying to advise to help build wealth for clients if they listen to us. Just me personally, I just love like entrepreneurship. I just love hearing stories about businesses, and all of my team here is really just facilitating to help people is what our background is. So that's a little about us.
Yeah. So one of the things that we talk about a lot, especially with our investors, we talked about on this show how to make, keep, and grow your money, and the pillars of keeping your money involves protections, proper legal entities, but also tax strategy. And a lot of people say, "Well, Chris, I have an accountant; they do my taxes for me." What's a tax strategist? So if you don't mind sharing, what's the difference between a quote unquote accountant and more of an advisory service or a tax strategy service like you guys do?
Yeah, I mean, historically, if you're just getting taxes done, it's always looking in the past. And you submit your documents in February, March, and get them done. And then, they're like, "Oh, you should have did this last year." So, we keep track for business owners. We're keeping track of the data monthly, so that we can be on track for December 31st, to do that tax plan, whether it's, do you need to make an S Corp election, or if you're an S Corp, your reasonable salary, not overpaying yourself and wasting payroll taxes, from deductions, making sure they're classified properly, especially in like e-com. A lot of people think you can just buy inventory and it's expense. That's not the case. And then, for savings too. So, depending on your cash flow, I mean, obviously it's case by case basis, but after the conversation, like kind of, do you want to participate in a 401k? If you're an S Corp that needs to run through payroll. So, or, maximizing IRAs, depending on your income, or, doing a backdoor Roth, something along those lines. So defined benefit plan, et cetera. So just kind of looking at all of those like consider basic tax planning strategies before December 31st is what we're trying to achieve here, just on a first level. And then from there, we get into really the kind of nuts and bolts of like deductions and, running it through your business or making sure we're capturing all of those things within the financial statement or when we're filing your taxes too.
Yeah, no, I think it's really challenging for, somebody that's a W-2 employee. They pay their taxes, they get their W-2, and at the end of the year, they settle everything up. And, there's not a ton of stuff that a W-2 employee can do. Who do you usually work with? Do you work with your typical W-2 employees? Do you focus solely on business owners? And, kind of a corollary to that question is, who should look for a tax strategist? Like, when does it start to make sense?
We do some 1040 work. I mean, mostly, if you got like some stock options, or, you've got something a little more complicated, foreign reporting or something. But if you just, normally we're just honest, and if you just have a W-2 and a mortgage, you can just use TurboTax. As to your point, there's really nothing you can do as far as like a strategy. We really mainly focus on our bread and butters business owners, whether it's one owner consultants, all the way to like about 20, 30 employees, anywhere from like, 100,000 plus to usually like 20, 30 million is kind of our range. So it really just depends on what you're selling, and doing.
Yeah.
But for us, we don't do construction accounting. We don't do restaurants generally. We'll do some taxes for them, but the month-to-month accounting is different. So anything outside of that is pretty agnostic for us as far as like industry is concerned. And the accounting and taxes for us are the same. It doesn't matter what business you're in outside of those two. It's all the same planning for us. It's all the same accounting.
No, that makes sense. And I think, we can kind of talk a little bit about what you could do, going forward if you are an employee, and some of the things that you can do to maximize that. But the big topic I want to talk about is really how to build your wealth while you build your business. I think, it's the financial planning system is broken in a lot of ways. And we've talked about this multiple times on the podcast, but most people, they go, to their financial advisor and they say, okay, like, let's figure this out. And their financial advisor says, oh, just contribute to your, 401k or, whatever plan you have an option. And, if things work out, and, keep your fingers crossed, because we don't know what the market's going to do, but maybe you can retire by the time you're 60. And for somebody that's 30 years old thinking, well, geez, I've been working 5 years, I got to wait another 30 years to retire. Like, your typical business owner doesn't have that mentality, right? They're a hard charger. They want to continue to be productive. They may want to sell their business. We just had an individual on the podcast, and they talked about, how to start, take like strategies to take equity out of their business. When you say build wealth while building your business, what are some of the things that you're referring to, Chase?
Yeah, good question. A couple things there. Just on a basic level, most business owners are just continually reinvesting in the business, or, trying to build something, and they don't really pay attention to themselves kind of in your profit first model to at least contribute an IRA. I mean, $500, $5,000, whatever it is, just contribute something annually is what we're trying to promote here. And then from there, if you built the business where it's cash flow sustainable and you have the money to do it, then, at least putting it in buckets of 401k. I mean, it's only 22,000 this year. Like, you're making a good amount of money. Like, that's not that much. Max out an IRA, and just do those basic things. And then beyond that, depending on cash flow, maybe getting like defined benefit plan, or, you're looking at rental property. But my philosophy has always been spread out the risk spectrum. So putting it in different little buckets. Obviously, you got short-term savings. I mean, that's the first thing we're promoting. And if you don't have that, start there. But, and then from there, those kind of retirement accounts, and then real estate. Like, I have 15 rentals myself, but I'm maxing out 401k. And so I have all these different buckets of kind of the retirement spectrum. And so that's what at the basic we're trying to promote for business owners is, at the end of the day, save enough or save along the way as your business is growing, so you can not have to worry about selling your business. I think the statistic is 85% of all small businesses never sell. Wow. And so, when you you get to that end point or the end of that rope, you've all that blood, sweat, and tears, just like myself, that I've put into it. You think it's worth a lot more than what the market's willing to pay for it mostly. Yeah. Sometimes you get lucky, sometimes you don't. But at the end of that rope, my philosophy and how I manage my own money is I don't want to be beholden to the end of that rope, and that's going to be my retirement. Yeah. So I'm saving along the way. I'm building, that retirement spectrum of buckets of money, and doing it, conservatively, because, I'm CPA, so I have to be conservative. So at the end of the day, if I sell my business, I'm just going to consider it a bonus. I don't need to hope and pray that somebody's going to give me a check and I can walk away. And obviously I'm in a service-based business, so it's a lot different than I'm building a software, I've got a brand or something. It's a little bit different. So that's how I live my life. That's how I, am building my wealth and retirement, growing my business. And that's what we communicate to our clients, in the same way of thinking about that way, and doing it as you're growing, whether it's, paying yourself, paying your spouse, paying your kids. Like, let's put something away annually, just so we're on track for some kind of goal at the end of the day in retirement.
I think that's great advice. I've watched multiple friends. I remember back 2001, after the towers came down. We just passed 9/11 here, and not too long ago as we record this. And one of my friends ran a very successful private charter flight business, and that literally disappeared overnight. And then I have another friend, and as we went through COVID, he did small business lending, and when all the small businesses shut down, his business literally just disappeared. So even industries that seem very sustainable or very recession resistant, when we can't predict the future, when you have all your eggs in one basket, you say, hey, I'll just sell this one day, and that's my ultimate retirement. That can be very risky. Although most people, that is probably their number one way to invest, is to reinvest in the business for growth. But we were talking about before the show, the profit first model, which is something that I've been doing kind of in my personal life. And we talked about it multiple times, but basically, pay yourself first, invest first, and then spend the rest. It's funny. We're in this, most people hate budgets. Maybe you love budgets because you're an accountant, Chase, but most people, they just don't like budgets. And it's like, well, if you don't like a budget, then hack the system. So I say, well, hey, set your savings goal first. And once you hit that savings goal, then whatever's left at the end of the month, you get to spend it, and maybe you don't spend it all. Can you share a little bit more about kind of what that philosophy is, like what profit first is, and or your own version of that?
Yeah, sure. I think the people perceive like a budget as like this thing they got to follow every month, and it's just like, I can only spend X on food and clothing. But I mean, yeah, I put a budget together myself, the business and personal. Yep. But really, what that budget is basically figuring out how much I can contribute into the different buckets of money. Yeah. Whether it's savings accounts, whether it's retirement, whether it's vacation or whatever. I know annually, when I do it, in December, January, I know for the year what, in general, if my business and income is stable, where that money's going in those buckets. And so I think, just on a very simplistic level, just have that, because especially if you're a business owner, it's very hard to just manage your business by looking at your bank account. I mean, you can't, that's not really a judge of like how you're doing. That's not a judge of like where you're going. You can't really plan, and so you got to know, you got to really plan out a budget for your business and know, okay, I've got these costs coming. There's obviously variables month to month, and throughout the year, up and down, depending on what you do. And then, you've got costs, and maybe you want to increase labor. So you plug that in, and, Q3, Q4, that's going to affect the ending cash flow. But at the end of the day, that budget for me drills down into what is the ending cash that comes into me. And then I take, that flows down to my personal budget. And so now I know, okay, I've got this bucket of money for savings, and this bucket of money for retirement, and this bucket of money for, growing the business and reinvesting back into it and, adding to the organization chart. So, I think looking at it that way, it not necessarily thinking, oh, I've got to put, $5 in this envelope. Like I don't really believe in the envelope system, but kind of the same way, because I know mentally like where the money's going to go throughout the year, and, where, like, do I need to move things around as things change, and shift. I can think, okay, well, I can take a little from retirement and, put it into growing the business because I got this opportunity right now that I think is going to take us to the next level and add value. So those kind of things, that's what a budget is really for, and forecasting it out annually.
Today's show is sponsored by Money Insights and their investment optimizer strategy. In my book, I share how I use this same strategy starting over a decade ago to invest my money in 2 places at one time. This strategy has been used by the wealthiest for generations for estate planning, minimizing taxes, preserving wealth, and increasing stability for their investments. Now you can do the same thing. In addition, you can build a plan to build an emergency fund, pay for college, fund a business, plan for retirement, and ultimately optimize your total financial picture. To find out more information, check us out at the banking link at nextlevelincome.com. Yeah, and look, I will tell, be 100% transparent. I track everything that I spend business-wise, as well as our family. We review it every month. We make sure that we're quote unquote on budget. To make sure that we're not missing different things. But, I think from a mental perspective, if you can, set aside that money first, that's going to be, for your future income or passive income or those investments, it makes it more fun. It's kind of exciting, and you get to spend stuff and enjoy it on the back end and do that. Our family rule has always been save 50%. And then, it's cool. Like if I got a big bonus, let's say I got a $20,000 bonus, put $10,000 aside, and maybe I would go buy a new bike. I've raced bicycles for a lot of years, and you can do it kind of guilt-free, which is a lot of fun. Or maybe take a trip. And this is something this is really cool to hear you talk about this. When we were chatting, you were talking about points. I was like, wait, you're a points expert. Like, what is that? I was like, do you mean like credit card points? And you said, yeah. One of my favorite things is like we found all these little ways, like one of the things we do with our Amazon card, because we probably spend a mortgage's worth of money at Whole Foods and Amazon every month between our personal household as well as we have a couple of short-term rentals, and you get 5% back on your Amazon card when you go to Whole Foods or Amazon. And we use those points, and that's how my wife and I do our Christmas shopping on Amazon every year. So like, it's awesome. It's really nice. But you're way more experienced on the travel side. We were talking about like the Chase trifecta. Let's spend a little time talking about some fun stuff. Like if you're a business owner, or even if you just, are a high income, earner and you spend money, what are some of the strategies where you can take advantage of these reward systems that are out there so you can save money on some of the stuff that's fun, like travel?
Yeah, it's kind of one of the, quote, kind of building wealth tools that I try to advise business owners with. And because, you're already spending the money, so you might as well get the benefit of using the right cards, in my opinion.
Right.
I'm very fortunate. I could pay cash for all these vacations I take, but, we were talking on the show before we recorded here, and I told you I went to Bali for 2 weeks. I flew first class, business class. I stayed in 5-star hotels. And I probably spent, maybe $2,000. That was just on like food and like spa treatments and,
that's
just like
that's
stuff we're buying.
Yeah.
Yeah. And, so, but that's all points and miles, a lot of points and miles, but, they accumulate, when you have a business, especially, and you're spending every month. Oh, yeah. And so that's kind of one of the wealth tools that we try to promote. And the way to do it is, obviously I'm a little more sophisticated. I've been doing it like since 2007 or 8. I just kind of figured it out on my own one day, long story. So I've been building from there, and, I have, on my, credit cards, I have like a little printout that tells me like 4x for this or 2x for that. So I know like what card in my wallet to use when I'm buying stuff. Like I know, It's very
So
CPA of me, but
yeah. So what you're referring to is you get, like I was saying, you get 5% cash back at Amazon. So we use that at Whole Foods. We pre-program that on Amazon. But some points, like one of my business cards, it gives you like 3 or 4 times the points for hotels or for gas, or business expenses. Another one might be 2x on things like that, or the base might be one times the points. Is that right?
That's correct. Yeah.
Yeah.
So, all different. I mean, there's really 3 main programs, maybe 4. I mean,
Okay.
if you're just starting out, I always recommend the Chase platform because it's one ultimate rewards system, and you can transfer points between your personal and business cards in one place. So that's what I usually recommend to start out. But like I have, the Chase Inc. Business Unlimited, you're earning 1.5 points per dollar for the business. You've got, the Chase Sapphire Preferred, or you're either 2 or 3x on dining and travel.
Yeah, one of my favorite.
Yeah, and then there's Amex. I mean, a lot of people use Amex, but the really only use the Platinum card for anything over 5,000 because you get 1.5 points per dollar on large charges over 5,000. And the Gold card, one of them I have for restaurants and software. Like Microsoft 365, you get 4x Amex points per dollar.
Oh, wow.
And then another Gold card I have is just for gas and advertising, which is like 2x per dollar. So
yeah,
it's a little sophisticated over here, but just to start out, to keep it very simplistic, just look at Chase, look at a personal and business. One key rule is never joint cards with your spouse, because the spouse cannot apply for the same card and get the bonus. So you each should have the same cards, and you in order to get the bonus, and then spend on those cards individually. But once you get the bonus, you can cancel it.
That's good to hear. I'll put the link in the show notes here for the Chase trifecta that you talked about. And I'm not quite to your level. I'm like, oh, I can aspire to this. But yeah, we fly American Airlines a lot, so we use that card for some of the benefits. And I'm always calculating as we go through the year, so I can always achieve executive platinum status on that. And the same thing with Marriott. And then as you transfer points back and forth, it's fun because, like, when we go to lacrosse games, for instance, with my boys, we stay for free at the hotels because we have all these points. And it's always like I was mentioning, like at Christmas time and these sorts of things, it's cool. Which you can actually
one of the things,
pay a little attention.
Yeah, one of the key things to remember, and how I flew, all those flights for points, is that I don't book it through the portal itself. I don't use those points to book through the Chase portal or the hotels. The key is to transfer those points into the program. For example, like you transfer Chase point into British Airways, and you find reward tickets on British Airways. Transfer those points; they're usually immediate, and then book it. You're booking it through British Airways. That's how you get the maximum value in order to fly for at least amount of points. If you just book it through Chase, they're only giving you 1.5 points per dollar on a cash value. So that's how you leverage it. But I try to, example is like Southwest. People buy Southwest Airlines, and so if you have the Southwest card, it's great, if you can spend enough to get the companion pass, for sure. But outside of that, you're better off accumulating points in the Chase Ultimate Reward system, because you're getting 2x, 1.5x, whatever it may be. You're getting more than 1 point per dollar usually with the right cards, and it can accumulate in the Chase Ultimate Reward. You can use it for cash back. You can use it for buying gift cards, which I don't recommend, but you can do that. And you can transfer it to Southwest. So instead of continuing to use the Southwest card at 1 point per dollar, now you're getting 50% or more points per dollar and transferring Southwest just when you need it. And then they stay in the Chase account, so they're more flexible as you need them throughout the years. With hotels or airlines, it's just not all Southwest anymore. So just one thing to remember in the points game.
That's a great point. So I think, start with a program like Chase that you and I are so fond of, and then build on it based upon, the airlines you fly on, the hotels or whatever you stay at, and then figure out how to maximize the points based on the card for spending. And it turns out to be pretty easy, because you go to the gas station, or a lot of times you can just put your card in, right? And it's memorized for certain things, and then transfer between the different rewards programs to maximize those points. And it takes a little bit of upfront research, but it's like you were just saying, Chase, it can be a 50 or 100% or even more difference in the points and ultimately the dollars that you get in those programs, which is pretty cool.
Yeah, a couple of sources I recommend. I mean, I read them almost every day too, is 1 Mile at a Time and View from the Wing. Those blogs are generally consolidating the industry, and they're good at keeping up with stuff.
I love it. We'll
but back to profit first, I said, I mean, if you're already spending the money, just getting cash back is okay. If your goal is to travel and take the family to Disney or, wherever you want to go, then, the cash back is not going to go as far. And so that's why I recommend like the Chase portal, because you can do cash back if you want, but you can also do travel. So if your plan is to take a family vacation, then let it build up in there for a little while, transfer it to the programs you need, and then leverage that X spending to pay for it virtually for free. I mean, obviously there's a cost to it because you're not getting the cash back, but you're going to get more value out of using those points to travel than you are just getting cash back and paying for it with cash.
Yeah. That's exactly what we do. And I love that strategy.
Yeah. I mean, I'll just give you, like I mentioned on the call, just real quick. Just a prime example. I could pay $30,000 one way from Bali to Houston on Emirates Airlines for business and first class.
Yeah.
Or I could transfer points to Emirates and fly that A3 for free with the shower on board, and unlimited caviar. So there's no reason to spend that kind of cash, when I'm already getting the points, charging everything, and I can just do it virtually for free with transferring points. So that's just one example.
I love that. So I want you to raise your hand if you're listening and you've flown, taken a shower, and eaten unlimited caviar like Chase has here. And if not, check out what he's talking about. Well, let's wrap up, and I'd love to hear you share what's your top tip for a few different categories. So if you're a W-2 earner, what's the number one tax strategy you have as a first step for somebody that's just collecting a paycheck and getting a W-2 and paying taxes before they have any say in what happens there?
Really just depends on your personal goals, obviously, but if you want to get into real estate, I mean, that's one way to do it. You can also not invest directly in real estate and, earn pretty good returns in the market right now in real estate investment trusts, REITs, making 8 to 12%. You can also, do what you're doing in kind of the commercial programs, and invest in those strategies. So multiple different ways. I mean, we are limited, obviously, in how you can save. I mean, you can't, do another 401k outside of your job, but you can at least do IRAs annually for your spouse, and that's pretty much limited on the W-2.
Yeah. What do you think about, so if I'm a W-2 employee, like for instance, my wife's an architect and she was working for somebody else and she ended up starting her own business and her own practice and doing that. If somebody's a W-2 employee and they have flexibility or their partner has flexibility, do you recommend starting like a small business if that's something they're interested in?
Yeah, absolutely. I mean, and that's where, we tell people we can add value. If you have if you have a business, you have rental property, we can capture more deduction outside of these tax softwares that, are black and white in the box. We could play in the gray area and max those deductions out. So that, you can do that. That's great. One thing I like to remind people that normally they don't read is, rental property is cool. Like I mentioned, I have 15 myself, but if you're making income over the IRS threshold, you cannot take those deductions. So a lot of times people think, buy this rental and I'm going to reduce my high income just by having this rental with depreciation, but that's not the case. That loss accrues until you sell it or your income drops. But as you earn, over the threshold, IRS threshold of income level, I think it's 400 something thousand for married filing jointly. Right now, you're not going to get that deduction against your income. So that's one thing to be aware of.
Yeah, unless you're a real estate professional. And that's something that I know. I have friends that are surgeons, very highly compensated, and their spouses go out and they manage their real estate portfolio, and they're able to kind of take advantage of that.
Yeah.
What about if you're a small business owner and you can't say, call us and work with us? Like, what's the number one? Although that might be a great first step, but what's a really good tip for somebody that is a business owner that is looking to, really optimize their tax strategy?
I would just say, we always recommend, working with a licensed CPA, because there's recourse there. But business, there's probably deductions you might be missing or not even thinking about. So just on if you're just doing very basic, small business, or you just started something, you can keep track of it in Excel. You don't need like a complicated accounting system, but keep track of your expenses. Have a dedicated bank account, dedicated credit card. So it's easy to download those transactions come January and categorize them. Yeah. When you get a little bit more transactions and, you're kind of growing a little bit, certainly we use QuickBooks Online here. Yep. And keeping track of that accounting, and then as you're scaling, we keep tracks of that transactional work monthly in order to help advise for the end of the year and make sure we're on track for it. So maybe, you started out and you're a sole proprietor, or you start an LLC, but you're not making that much, but now you're making 50, 60K net profit after expenses. That's kind of our break even. So now we need to talk about an S corp election, and that requires setting up payroll. And then if you want to do 401k, you got to run it through the payroll. So making sure we can't do that in March and say, oh, I want to set up an LLC for last year and save money. You can't do that. So that's why we're constantly trying to be on track for December 31st and make sure we're meeting those tax goals.
Yeah. No, I love that. And I think, if you are a business owner, I think the biggest thing you can do is go and find a tax strategist like Chase, like his group, figure out what can we do going forward, not, hey, it's March of 2024. What should we have done in 2023? Because at that point, you're kind of out of luck at that point. So on that note, Chase, I've been trying to take notes here. Some of the 1 mile at a time, view from the wing, the points guy, Chase trifecta. But what's the best way for the audience to get in touch with you if they want to learn more about what you do?
Yeah, just reach us on our website, Insogna CPA. It's INSOGNA CPA.com. And just hit us up in the contact page, and my team will reach out to you. You've got a team of 20 people here, so you can call our office. Someone's answering the phone, but happy to have a conversation. Happy to see how we can help. If not, we'll refer you to refer out. But we're always happy to help people here and see how we can build wealth for you.
Love it. We'll have that link in the show notes as well. Chase, it's been great talking to you, geeking out on all these different topics about how you can not only save money, but also take advantage of the money that you're already spending through fun stuff like we were talking about with the point systems. Thanks so much for sharing your story with the audience and bringing some value today.
Thanks for having me, Chris.
Hey, Chris here again. I hope you found this episode valuable. Now, I have one more thing to gift you. We have a page for my coaching clients where you can get a free copy of my book, as well as much more from previous guests on the show. Just check out nextlevelincome.com/coaching to get a free copy of my book, audiobook, and much more. I'll send you a copy of my book and cover all the shipping costs as a thank you for listening to the podcast. Also, please like, share, and take just 90 seconds to give us a rating on Apple Podcasts.